Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Brixmor Property Group Inc. Annual Report. Brixmor Property Group Inc. offers a wide range of businesses and services through its portfolio of open-air shopping centers. At the heart of their operations are retail centers that provide prime retail space to various types of retailers. These include national, regional, and local stores, catering to diverse consumer needs. The company's portfolio comprises over 354 retail centers, covering approximately 63 million square feet of retail space in established trade areas. This extensive network allows Brixmor to partner with a large number of retailers, including well-known brands such as the TJX Companies, the Kroger Co., Publix Supermarkets, and Ross Stores. By providing a platform for these retailers to operate, Brixmor plays a vital role in supporting local economies and communities. In essence, the businesses and services offered by Brixmor can be summarized into retail space leasing and management, with a focus on creating thriving community hubs that cater to the needs of both retailers and consumers. The recent surge in Brixmor Property Group Inc.'s (BRX) stock price can be attributed to its impressive fourth quarter and full year 2025 financial results. Released in February 2026, these results showcased a significant increase in net income, with the company reporting $0.44 per diluted share in Q4 2025 compared to $0.27 a year earlier. This strong performance was also reflected in the growth of same-property net operating income, NOI, which rose by 6% in the fourth quarter and 4.2% for the full year. The company's optimistic outlook for 2026, with expected net funds from operations, FFO, of $2.33-$3.37 per diluted share, and same-property NOI growth of 4.5%-5.5%, further boosted investor confidence. Additionally, Brixmor's strategic activities in 2025, including significant acquisitions and dispositions, as well as the stabilization of reinvestment projects, demonstrated its ability to adapt and grow. The immediate impact of these results was a notable increase in BRX stock price, with shares reportedly adding approximately 8% since the beginning of 2026. While some sources indicate a more modest overall increase or even a slight decrease over the past year, the strong Q4 2025 earnings announcement is widely recognized as the primary driver of this positive movement. Brixmor Property Group Inc. maintains a market capitalization of $9 billion, broadly in line with the industry peer group. Brixmor Property Group Inc. trades at a higher price-to-earnings ratio of 26 times and a higher price-to-book ratio of 2.86 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 67% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 4.37%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth and decline are multifaceted and can significantly impact a company's financial performance. On the growth side, key factors include an increase in rental income, other revenues, net transaction activity, lease renewal options, and higher net operating income due to various non-same property activities. Conversely, revenue decline is often driven by tenant-related issues such as failure to make payments, lease terminations, bankruptcy protection filings, and difficulty replacing departing tenants. Additionally, adverse changes in credit ratings, acceleration of indebtedness due to covenant breaches, uninsured property losses, and environmental liabilities can also contribute to a decline in revenue. Neutral or other factors that may impact revenue include changes in U.S. federal income, tax laws and regulations, failure to maintain REIT qualification, prohibited transactions, and compliance with REIT requirements leading to liquidation or restructuring of investments. These factors can have a significant impact on a company's financial performance and should be carefully monitored by management and investors alike. The net income of a company underwent significant changes between 2024 and 2025. Initially, it decreased due to increased debt service obligations from variable rate indebtedness. However, this trend reversed with an increase of $15.2 million on page 37, attributed to various factors such as acquisitions and value-enhancing reinvestment activity. The net income continued to rise, increasing by $46.9 million, 13.8%, in 2025 compared to the previous year. The profit margins also experienced fluctuations during this period. Initially, they were negatively affected by higher interest rates on variable rate indebtedness, increased competition for acquisition opportunities, and potential failure to achieve expected returns or integrate acquired properties. However, the exact impact of these factors on profit margins is not explicitly stated in some sections. Nevertheless, it can be calculated that the profit margin remained relatively stable at 74.1% in 2025 and 74.3% in 2024. The net income continued to rise in 2025 due to various factors such as acquisitions and value-enhancing reinvestment activity. However, the profit margins decreased due to impairment charges and increased expenses from inflation and tariffs. Despite these fluctuations, the company's financial performance showed signs of improvement, with a significant increase in net income and relatively stable profit margins. The company's financial performance is a key indicator of its overall health and stability. A crucial aspect to examine is the generation of positive operating cash flow. According to the provided summaries, both Brixmor Property Group Inc. and Brixmor Operating Partnership LP have reported net cash provided by operating activities in the amount of $652,010 for the year ended December 31, 2025. This significant figure confirms that the company is indeed generating positive operating cash flow. This is a vital sign of financial health, as it indicates that the company's operations are producing sufficient cash to meet its obligations and invest in growth initiatives. The consistency of this result across both entities further reinforces the notion that the company is on solid ground financially. Management's primary objective is to maximize total returns to stockholders through consistent and sustainable growth in cash flow. To achieve this goal, the company has identified several key strategies. Firstly, it will proactively manage its portfolio to drive internal growth, while also pursuing value-enhancing reinvestment opportunities. The company's competitive advantages position it for success, including expansive retailer relationships, a fully integrated operating platform, and experienced management. Additionally, management is taking proactive steps to mitigate potential risks, such as assessing and addressing potential impairments in real estate assets. To address inflationary pressures, the company expects to increase rental rates upon renewal or releasing, which may offset these costs. Furthermore, it has entered into interest rate protection agreements to minimize the impact of changes in interest rates on variable rate loans. Overall, management's strategy is focused on driving growth and maximizing returns while managing potential risks and challenges. The company's financial performance is a crucial aspect of its overall health and stability. One key indicator of this is the payment of dividends to shareholders. According to the extracted summaries, it appears that the company has indeed paid dividends in the past. This suggests that the company has generated sufficient profits to distribute some of them back to its investors. In addition to paying dividends, the company has also engaged in share buybacks. This means that the company has purchased a portion of its own shares from the market, thereby reducing the number of outstanding shares and potentially increasing the value of each remaining share for existing shareholders. Concerns about supply chain disruption have been raised due to international trade disputes and tariffs. This could lead to delayed delivery of key inventories and supplies, potentially affecting businesses that rely on timely shipments. The impact of these disruptions may be felt by tenants who are unable to pass increased costs on to their customers. If they cannot absorb the added expenses, it could negatively affect their financial performance. That concludes the financial summary for Brixmor Property Group Inc. Feel free to comment below, and I will be happy to answer them when possible.